Hey, what's up, yo? I wanted to do a quick video going over how the market reacts to a CPI report. Now, the CPI report is the consumer price index, and it measures the amount of inflation in the economy. And we get a report every month, right? So I'm going to show you how the market responds on the day of CPI and 2 days following CPI for the last 6 months, right? This was for the March reading, March 10th. You see, this was the day of CPI. Then we gapped up the next day, and we had a continuation down for the next day before a bounce. For February, we had a run up, and then it kind of like not gap down, but it just continued down for 2 days in a row, right? Same thing here. A gap up and then continue, not a gap up, but a continuation, right? A higher open and then a continuation down. Same thing here, continuation down on the following 2 days after it in the CPI reading, sorry. You can see here. Now I'm gonna go to November. This is November here. And then here is October the 13th. This one is important. I'm gonna tell you why, because it's more similar to what's going on right now, what can affect us right now. So today, this week's is the start of earnings season. On Wednesday and Thursday, we got banks reporting. We got JP Morgan on Tuesday. On Wednesday, we got Goldman Sachs on Thursday. Now, for this particular CPI, you know, this is for October 13th. The CPI forecast was 5.3, and we actually was higher, 5.4%. The market gapped up the next day, right? Now, keep in mind, JP Morgan reported earnings that day also, and the banks, this particular bank, they report pre-market, so it's before the stock market opens. So so I think the banks gave it a boost here, and everything, and it kind of ran. So there is, like, I'm not saying, and I have hope in the banks anyhow, right? Faith in the banks coming through, because they missed the last quarter, and it's been a big mess, right? So I think the banks beat earnings, and the market runs. The market was heavily oversold today, and normally stocks like or sectors like XLP, the consumer staples sector, that has stocks like Costco, Walmart, stuff like that in there, Colgate. Those are defensive stocks that in any market environment, we're going to need those types of stocks. Like, for example, if there's a recession or a war or a pandemic, we still need to go to Walmart. We still need Colgate. We still need Costco. So those are defensive stocks, and those stocks normally run. That's where the hedge funds normally hide their money. They sold those off. They sold off like oil. Well, oil was down anyway, pre-market. We knew that, but it was different today. The way everything was weird. We had a lot of bullish divergence that never played out. And it was just a lot of things that were going on in the market that was weird today. But I'm big on XLF, so I'm trading the XLF ETF. It contains all of the banks, and so I'm betting on a some JP Morgan beat. And JP Morgan is heavy in Dow also. So I like DIA also. That's the ETF that tracks the Dow Jones. And the Dow Jones contains the top 30 stocks on the New York Stock Exchange, whereas the S&P 500 contains the top 500 stocks on the New York Stock Exchange. And the NASDAQ it monitors the technology sector, right? So but yeah, so I said all of this to say that so this particular, the October 13th CPI print is more consistent to what we have going on possibly tomorrow morning. So and again, with the banks being so oversold and everything being oversold, you see the market had ran down, had pulled back 3 days prior to this CPI reading as well, just like it's doing now. We had a 3-day pullback in this market also. So it's a lot of similarities. And again, so let's see what happens tomorrow. I just wanted to kind of do this update because I wasn't on Zoom today. Yeah, but here we go. I'm looking forward to tomorrow. And actually, just a side note, right now, I saw XLF was actually, I'm going to show you real quick. XLF was actually selling off in the Asian futures market just a little while ago. Let me just see. I just happened to see that before going live. Check this out. Look at this right here. This is the Asian futures market. XLF sold off right here. And now there is back up here now. And SPY is actually selling off too. And QQQ is selling off bad. Now, QQQ is an ETF that tracks the NASDAQ 100. That's the tech stocks. And tech stocks are going to be hit the hardest with, because, and the reason CPI is so important is because a higher CPI print means that inflation is going to be higher. So like right now, if they're shooting for 8.5% CPI print, that's 8.5% off $1. You know what I mean? If you're saving money and stuff like that. So it's not good, right? So the Fed is already expected to raise interest rates 50 basis points at the next FOMC meeting. And that's next month. And so this just kind of scares people away from tech a little more. So you just want to be heavily diversified in situations like this. But anyway, this isn't the time to do that. I just wanted to give you guys some hope and just let you guys know what's going on. Now, we have a short week this week, Good Friday. So the stock market will be closed on Friday. So consider today like Tuesday. So theta decay is a factor. If you're trading options, your contracts are there. You're losing money just because you're holding them. And the closer you get to expiration, the more theta eats away at your profit. So you want to kind of like be in and out. And if you and it's probably best to kind of trade if you're not to buy contracts, put some more time on them, but it's a lot of sales going on right now and stuff like I like oil right now. And I also really like the consumer staples, the XLP ETF, and I love the XLE, the energy sector ETF as well. So yeah, that's all I wanted to do, man. If y'all have any questions, drop them in the chat. Peace.